Hello folks, this is Raj Sastry from Raj Option Trading. Today is April 24, 2021. I want to do a quick recap of stock market activities last week and also talk about few stocks that we can buy at this point and also the earnings, what are the few notable earnings last week. With that, let's jump in. Today is April 24, 2021. So last week, solar stocks were up. As you know, solar stocks were down for a while now, and I see there is some traction in the solar stocks with the DQ, Enphase, Maxion, First Solar, and even Renes Solar. They're all up nicely. The clean energy stocks are trading up. As an example, we got TPI, ALB, HASI, BE, and lithium. As you know, I mean, many times, stock market kind of rotates between sectors. I feel like, whenever a sector is beaten down drastically, for example, last few weeks, solar was beaten down, it's good to invest some and hold it. So you can always count on a nice bounce back. Given, the solar is and clean energy is a, emerging trend, it's going to continue for a long time. And few biotech stocks are up. Example, BTX, OCGN, Kodiak. Healthcare stocks were up, especially bigger ones like UNH, United Health, J&J. J&J mainly because I think the COVID vaccine after states and federal government shutting it down, and now they are opening it up because looks like risk is a little bit mitigated. The real estate stocks are up, as you can see here. Chinese real estate BK, UMH, Open, AVI. Autonomous driving stocks are up. These guys are in the beaten down so drastically for last couple of weeks. Now they are kind of showing some signs of improvement. I feel even up here, these stocks are good investments, and this is the emerging theme. In 5-10 years down the line, most of the cars will be autonomous and EV play. Chinese stocks are up. As you know, Chinese stocks are beaten down so drastically with this whole Archegos saga, the hedge fund blowing up and making a big news. Now I can see stocks like Billy, Whips, ZTO, KC. They're all doing nicely at this point. I think it's good to invest when these stocks are down and be a contrarian. Even though stocks are down, that could be a good opportunity to invest. They will always come back. Skyworks, they had a deal to buy Silicon Labs for a 2.75 deal. I think this is a very good deal. Skyworks is already a leader in 5G, and this deal will give them exposure to auto industry. I think it's a very good deal. I think Skyworks is doing the right thing here, diversifying. Cryptocurrency is down, as you can see, the Bitcoin, Ethereum, all these are down. So the way to play this is really whenever they're down so much, you could buy a little bit. You can buy from by using Coinbase. You can buy the actual Bitcoin, actual Ethereum. I think that's a very good way to invest, and they will come back nicely. So whenever it's down drastically, it's good to buy some. Crypto stocks are down. For example, Coinbase, which is a newly minted IPO, ticker symbol COIN, Marathon, Riot blockchain, SI, which is Silvergate. All these are down. I think whenever crypto stocks are down, mainly because cryptocurrency itself is down, it's good to buy some and hold it for a long time. They will always bounce nicely. Indian stocks were down. Tata Motors, HDB, Infosys, Satyam, all these are down. I think it's good to buy. When these stocks are down, they will always come back. E-commerce stocks like Shopify, eBay, Chewy, they're all down. And consumer staples, for example, Kimberly Clark, Clorox, these are all down mainly because they've done so nicely with this shutdown. Now it's really tough comparison, from last year. So that's why some of these stocks are down drastically. I would be a buyer at these levels, buy a little bit and hold it for a while. Semiconductor stocks were down. Intel, Nvidia, Marvell, Lattice Semiconductor, IIVI. And Intel, I think they announced their earnings, with this new CEO, Pat Gelsinger. And Intel, I think they, really didn't do nicely when it comes to earnings. That's why stock came down. They had some data center related, earnings miss. I think, with this new CEO, Pat Gelsinger, I think Intel is going to do well. He's a veteran. He was in Intel before. He went to VMware and came back. Energy stocks were down. OKE, Halliburton, PXD, all these were all down. I think depending on the day, sometimes these energy stocks will be down. Mainly when the COVID cases rise up, these will go down. When COVID cases go down, there is a hope for the recovery. These stocks will come back up. I would not invest in the energy stocks for the long haul because, as you know, these old style fossil fuel type energy, I think they're not a emerging trend going forward. People will be looking for clean energy, solar, battery technology, some of these stocks versus old style oil and gas type stocks. We had notable earnings. We had Intel, Clorox, SEIC. We'll talk through this in a little more detail. So with that, let's jump in and go into notable earning update. From an earning perspective, as you can see here, Intel, they missed earnings per share by 25 cents. They had a revenue of very good revenue here, 18.57 billion. It's still year over year 6.36% down, but they did beat on the revenue. The main news is really they missed on the earnings per share by 25 cents. That's a big miss here. And stock slides, 20%. I think the stock slides because I think on the data center side, I think they had some decline, 20% decline. That's why stock slid. And I think overall they raised the guidance, for the full year. I think there's a very big competition from both AMD and Nvidia. That's why Intel is really having a tough time at this point. But I do see this new CEO, Pat Gelsinger. He's really a trusted veteran hand. I think he took the helms of Intel. He can really do very well and compete effectively going forward. Netflix, I think they beat on the EPS as well as revenue, but they had some disappointing subscriber numbers. That's why stock kind of went down. Whenever Netflix goes down after the earnings, typically I buy some because it's a good opportunity. Netflix typically always comes back. I think Reed Hastings, their CEO, is really very, very good CEO. He knows how to lead a company. Clorox dips. I think these guys, as we talked about, Clorox did very, very well in the COVID, lockdown type scenario because everybody needs Clorox wipes, and we could not find Clorox wipes in the market. That's why last year was very good. Now, tough comparison compared to last year. That's why Clorox dip. Kimberly-Clark, same story. I think stock slumps after the earnings miss. They missed by 13 cents. Same story here. Even Kimberly-Clark did very well last year. Now, with the comparison, these stocks will have tough time. Sleep Number, it's a very good steady Eddie stock. They help you sleep well at night. Adjustable beds. You can do heat settings. They beat by on the EPS side, earnings per share side, but missed on the revenue. I think stock took a very, very big hit here. I think it's a good time to really buy some Sleep Number. Very steady Eddie type stock, nice chart, nice revenue. Chipotle, Mexican Grill, I think they topped the estimates. I think they also had a digital ordering, it increased. I think, Chipotle did a very good job when it comes to digital ordering. And because of their small, restaurant size and curbside pickup, and also organic type food. I think people really like Chipotle Mexican Grill. But this time I think they missed on the revenue estimate. Mainly because they did so well with this whole COVID shutdown. Now it's a tough comparison for Chipotle. I would be a buyer in Chipotle also. And American Express, they kind of, they did beat on the earnings, but missed on the revenue. And they also see the travel recovering. It's understandable because a lot of people are taking COVID shots. Many folks got, two shots. I think overall, I think it's a good opportunity to buy American Express. I really like American Express because they do have bank itself, and also they have credit card. They don't need to go through a third party bank. So that's why I think these guys will do well as travel recovers. I think these guys will do really nicely because people want to leverage airport lounges or travel benefits from American Express. And on the contrast, there are some good earnings also. Tractor Supply shares jump after record performance. I think these guys are doing really nicely. People want to buy these garden type supplies, tractors and whatnot. And Honeywell also did very nicely. I think they topped the profit. They also did very well, on the sales expectations. I think overall, I feel like the stocks which have done nicely, around during the COVID shutdown, they are taking a little bit breather because it's a tough comparison. But stocks that did badly during the COVID times, like industrial as an example and retail, they're doing nicely, and even airlines, they're doing nicely because for them comparison is really getting better. They are going off of a lower, comparison. So with that, let's look at some big macro trends and jump in. From a big macro perspective, big stock indices perspective, S&P 500, which is a ES, is a S&P 500 future. As you can see here, after doing very nicely for last 2 weeks or so, it's kind of taking a little bit breather, albeit a little higher, but taking a little bit sideways, a little bit breather here. Same story in the Dow Jones Industrial Average, a little bit flat in the last week, and same story with the QQQ, which is Nasdaq, or NQ, which is Nasdaq futures. A little bit down to flat line here. Really they're all at a 52-week high type area. So that's why they're taking a little bit breather here. And if you look at Russell is trying to make a comeback here. Russell was really not doing well last couple of weeks, but now they're trying to make a comeback. So as you can see here, as these big indices, they do nicely, Russell will kind of struggle. But when these big indices are flatline or a little bit struggling, historically, the Russell has done well, because Russell is small cap stocks, and it tends to do well as a counter trend type rally. And also this could be a leading indicator. As Russell goes up, typically, these bigger indices will follow. ZB bonds are really a little bit flat to up, and same story here. As bonds get a little bit flat to up, I think that's where stocks will kind of take a little bit breather. They will kind of watch and take a cue from the bond market. Then we got crude oil here. Crude oil came down a little bit, as you can see here. Gold is also a little bit down. All the commodities are a little bit down, and dollar is also a little bit down, as you can see here. So normally, with the dollar going down like this, commodities will typically go up. But this time, I see both dollar and commodities are kind of going along the same way. And normally even dollar going down will help these bigger indices, but right now they're flat because they're already up so much for the year. Now let's jump into the big ETF. I will not go into too much detail on the big ETF side, SPY, DIA, QQQ. They're all kind of flat, for the last week. Only the lower cap Russell 2000, it's trying to show a little bit progress here. And some of the typical, defensive type sectors like TLT, which is, the treasury itself, gold, XLP, all this defensive sector, as you can see here, they're kind of going down at this point because I think there is some hope that there is this COVID shots are making the economy open up a little bit, and these guys are also after a tough comparison, especially XLP, and XLU also. XLU, as you can see here, dropped off a little bit. Just think about, big dividend-paying stocks and utilities like Verizon, American Electric Power, and some of these big steady Eddie type, dividend payers. Then we got technology flatline, semiconductor down. I think they had a huge boom here a couple of weeks ago with semiconductor shortage news, but now that news is old. It's kind of coming down, especially Intel, showing some not so good earnings report. XAR, these are really big, aerospace type companies like Lockheed Martin, Northrop Grumman, Boeing. I think it's kind of showing some signs of improvement, a little bit tepid improvement here. I feel like these big defense contractor, they will come up because they've been beaten down in the past. They will always come back up. XLE Energy, as you can see here, it's kind of coming down last couple of weeks. I would not be an investor in XLE for the long haul, but whenever it's down drastically, you could buy some, but probably it's good to wait a little longer. Retail is doing a nice comeback here because as economy opens up, people want to shop, they want to go outside. Many of my friends, they want to go outside and buy and do some of these shoppings. And IOIR, real estate is really doing very, very, very nicely. People are buying houses, bigger houses. People are buying houses in suburbs. I think it's doing nicely. I think it's a nice trend here. I would, buy real estate stocks, on any pullback. Think about, DR Horton, Lennar, and some of these, real estate names. We will talk about some of those as we go forward. XLF financials, they are kind of doing okay. As you know, interest rates can only go so low. With interest rates so low, there is some hope at some point these interest rates might go up. As interest rates go up, these bank stocks will automatically go up because they will make some more money off of our deposits. XLI Industrials, they're really doing well. Think about stocks like Deere, Caterpillar, Honeywell, some of these big industrials. I think they are doing very nicely. I think they were beaten down so much in the past. Now they are really doing nicely. I would be a buyer in some of these industrials. If I see any earnings misses, I would be buying some. Next, let's jump into S&P 500 or the ES, which is S&P 500 Future, and skew. I pay very close attention to the skew, as many of you know very well by now. Right now, as you can see here, skew is at 140, trying to go up here. Anytime skew goes around more than 140, 145, I'll be watching. At this point, because skew is going up, I would not be buying all the stocks which are already up. I would be looking for some nice value type plays or beaten down stocks, because anytime this skew goes up, you got to be very careful. As an example here, we had an all-time high of skew at 159 back in July type time frame, which is 2019. And as you can see here, we had a big dip here. As you can see, it's 2018. This was the interest rate, hike by our Fed Jerome Powell. Stock took on their chin. And same story here. Sometimes in 2020, it reached all the way high around 150 or so. This was a little bit before the COVID-related, stocks melt down. Then, stock market, really melted down. So whenever VIX kind of goes up, it gives you a heads up. It will maybe a week or so later, or week or two later, stock market will typically take a breather. So right now we are not there yet. As it goes up a little more around 145 or so, or 150, as you can see it went here, came down. So if it reaches around 150, be sure, take some money off the table and wait for a pullback and buy some stocks. So with that, let's jump into bonds and interest rate here. As you can see, your bond is ticking up. As bonds are ticking up, I know that's a little bit bad sign for stock market. You watch out because money will pour into the bonds, and interest rates are really, it's as bonds go up, interest rates will go down a little bit. That's what's happening here. This TNX 10-year interest rates. Then we got DXY dollar. It's kind of going down at this point. This should help, commodities a little bit because as, dollar goes down, it's much affordable to buy commodities, US commodities. Next, let's look at big stocks here. Microsoft, as you can see, are kind of trading sideways at this point. I think these guys, have done very nicely. As you can see here, there are some email and security issues a while ago. That's why it traded sideways here. Now they came back. I think these guys are really at a almost all-time high here. I'll be watching carefully around the earnings and make my decisions based on that. Apple, I think they came up with some new product introductions, new color in the phones. I think, stock is kind of okay. I think trading sideways at this point. It's okay to wait a little bit and, buy on a quick bounce back. Amazon.com, as you can see, trading sideways for a while, kind of down to sideways. I would be, buyer of this stock in any pull down and take it from there. Facebook, nice pullback here. Facebook is a good stock. I would be buyer of this stock in any pull down, pullback, and hold it for a long time. Google is really doing very, very, very nicely as travel comes back. Google has got some good travel-related advertisement business. I think they will do very nicely. Netflix, as you can see here, they had an earning last week. Stock really came down drastically after the earnings. I think they had some, deceleration in the subscriber growth. That's why, stock is kind of coming down so drastically. I'd be a buyer of Netflix, at these levels, and they will always come back. I've seen this movie many times with Netflix stock. Nvidia, as you can see here, they've done nicely with the data center shortage. Semiconductor shortage. Now they're taking a breather. I would be watching around the earnings time frame, and I might, buy a little bit because it's a good stock. This is emerging trend. They're also buying, ARM Holdings. I think it's still underway. I think this stock can do nicely. J&J, as you can see here, all the debacle of this vaccine. Now they got some approval to really start the vaccines with J&J vaccines. I think this stock will do well. This is one of those very good stocks with a very nice financial position, dividend aristocrat. I think it's a good stock. I would be a buyer of this stock on any pull down. PayPal is taking a breather here. As you can see, it has done nicely during COVID days and went drastically in the beginning. PayPal is a good stock. I would be buyer of this stock in any pullback because as economy opens up, these guys will do very well also. Next is UNH, United Health. It's an insurance play, health insurer. This stock has done nicely. I would be a buyer of this stock on any pullbacks. Right now, it's so doing nicely. I would wait for a small pullback here. Merck is kind of sort of trading sideways, as you can see here. I like the Merck stock. They also do very good dividends. I would be a buyer of Merck stock on any pull down. Even at this point, I would think it's okay to buy some and hold it. Medtronic, everybody's doing the surgeries, elective surgeries of late. That's why Medtronic stock is going up nicely, and I think so are stocks like Edward Life Sciences and other Intuitive Surgical and other stocks. I think they're all doing nicely here. I would probably wait for a little pullback before I invest more. I like to buy stocks on a pullback. JP Morgan doing nicely. I think it's a good one to buy on any dip. especially because interest rates can at some point they have to go up. Feds might give some hints as we go forward. Berkshire Hathaway did nicely. I think this is a good steady Eddie type stock, good to buy on any pullback. And same is the story with the Visa, and even MasterCard is also good with the economy opening up. There will be more and more international travels. That's where these guys will do a lot of money. CME, it's Chicago Mercantile. I think it's a good stock trading sideways for the long time. In the same category, we got Nasdaq and SIBO. They're all doing sideways at this point. I would be a buyer in these stocks in any dips. Next, we'll go into major ETFs. We'll kind of cover quickly. One thing you can see by looking at this chart is look at the last column here. It talks about how much this ETF is off from a 52-week high. As you can see, real estate, healthcare, and even transportation, they're all almost at a 52-week high. So you got to be a little bit careful when you buy at that high, 52-week high. Normally, I would buy at a little bit dip. For example, China stocks have come down nicely with all the debacle that we had, and also Alibaba had some challenges with the Chinese government. I would be looking at stocks in these sectors which are which have come down from 52-week high. Same story with the XRT retail. I think retail is bouncing back now. And as you scan through this, gold is down nicely for the year. Maybe good to buy some and hold for a long time. And if you look at US dollars, it also has come back nicely. And energy, I think this is something, probably you don't want to be a long-term investor in the fossil fuel, but you could buy some and take care of, basically hope for a quick bounce back and exit out. And many of you may not want to play the stock market game on a day-to-day basis. That's when you can look at some of these 1-year and 5-year returns. For example, as you scan through this, XRT did nicely in the 5-year and 10-year time frame. Same is the story with IWM and very nicely for the 5-year and 10 years. And as you scan through this, even materials did nicely. And I would say, if you don't want to play this game day in and day out, buy some of these, ETFs like IWM, like SPY, XLF, XAR, some of XLK also a good one, QQQ. You can put some money into these as and when they, go down or a pullback. As you can see here, many of these are very low expense ratio, 35.035%, 0.19%. I think it's a very good idea to buy some of these ETFs, and you don't need to worry about this up and down stock market game. Maybe you don't have time. It's good to invest in these. You could also do some index funds and do it that way too. That's for the folks who don't have time and don't want to spend too much in looking at the stocks on a day-to-day basis. Next, we got Etf Winners. As you can see here, solar, after going down drastically for the quarter, 24% down for the quarter. Now it's showing some signs of improvements on a weekly basis, up nicely, 6.40%, up for the 10-day and monthly, but still down for a quarterly basis, up nicely for the year. I would be a buyer in selected solar stocks that we'll talk about as we go forward. Clean energy and lithium, these are really EV battery play. These are doing very nicely. I would be buying these on any pullback. Main thing is really these stocks like solar, clean energy, they always give chance to buy because they always bounce up and down, but on a longer term they're always going up. I would be buyer in these stocks as they come down. And as you scan through this, we got clean energy again here. We got Taiwan, which is doing nicely with all the chip shortages. That's a good one. Biotech is doing nicely. China stocks are doing nicely, and Mexico seems to be doing nicely. So I would be looking at these areas and buy them when the stocks are really down. And this chart is organized by weekly performance. The stock that ETF that you see at the top, it's got a 6% performance last week, and from there onwards, it's in the descending order. And you can also see the 1 year, 5 year, 10 year performance. I'm paying close attention to this also, especially if you want to buy an ETF, you want to stick with the little bit higher, longer term performance, and you want the expense ratio to be a little bit lower. So with that, let's jump into ETF losers. As you can see here, Bitcoin, especially the Bitcoin itself and Ethereum, they are they're drastically down. These will bounce so drastically as you can see here. So down 17%, down 10% for the week, and up nicely for the year. As you look at the Bitcoin here, up nicely for the year. One thing to note down is really, if you want to buy Bitcoin, if you buy this ETF here, you are paying a 2% expense ratio. So, you can buy this, but I would be buying rather the Bitcoin directly from either PayPal, Coinbase.com, some of these, even I think Square also offers it. You could buy directly. You don't need to buy, one Bitcoin. You can buy a fraction of a Bitcoin. That could be a better play, than buying these ETFs, which are a little higher expense ratio. Then Amplify, this is really blockchain. That's doing nicely. Sorry, that kind of drastically came down for the weekly basis, up nicely for the year. India down. Again, Cathy Wood's ARK next generation. Again, it has got some of these next generation internet type plays. It's down. Semiconductors down. Jets. This is really all these big, Boeing and Lockheed Martin. Some of these stocks, I think it's down, mainly around the aerospace type business. This chart is also organized by weekly performance. The one at the top is down drastically for the year. Sorry, for the week. So with that, in a nutshell, I would be looking at the sectors that have ETFs that have fallen down drastically, and I would be looking for some good stocks in those ETFs, and I would be investing in those. And if you want to buy these ETFs, look at the expense ratio. I would not be paying too much money. If it's expense ratio more than 1%, I would not be buying those ETFs for long haul. Instead, I would be looking at some stocks in that area and go from there. All right, so now we got stocks. When it comes to small cap winners, as you can see here, this chart is organized by 1 week performance. The stock at the top, Brooklyn, it's up 103% for the week, as you can see here. And it's in the descending order. Then we got Ocugen, 66%, and so on and so forth. One thing to note here is really many of these stocks, Brooklyn, Ocugen, many of these stocks have come down drastically in a week or two earlier. So what I typically do is really when they're down drastically, buy them a little bit and hold it for a long time. And if the IB percentile is lower, you could even buy call options maybe 3-4 months out. So with that, with the Brooklyn here, institution ownership is very low. It's really very low price stock at this point. Up nicely for 1 week and 2 week, and down 14% from the 52 week high. These stocks, I typically wait for a little bit pullback after going up 103% in 1 week. It's not good to buy at this point. I would wait for a small pullback. And you can see one more TCAT here, Tak Hung Art, Hong Kong based company. They're into art and collectibles. I think it's a good company. It's got good sales growth, as you can see, 1 year sales growth, quarter over quarter sales growth, nice gross margin. I like that. And PS ratio is a little high, meaning it's a little bit expensive from a valuation perspective. Nicely for 1 week, and up nicely for 3 months, up nicely for 1 year. So I would buy the stock on any pullback. Probably not at this right moment because it's up 58%. but I would buy this stock on a pullback. It's a good company doing nicely. Ag Eagle, this is one of those beaten down stocks. Just did very nicely. This week or last week. But this is also a good stock. Very low price stock. Whenever it goes down, you can buy some stock and hold it for a long time. Then we got AFMD here, German company, and $11 stock. Very nice sales growth, as you can see here, and up nicely. I think it's good to buy some of these on any pullback. Then you got Mankind, Live X Media. These guys are into music, podcasts, and those type of business. I think they're doing nicely. $3 or $4 stock here. Very good sales growth, as you can see here. And watch out for short ratio here. Some of these companies very high short ratio. When the companies have got high short ratio, wait for a little pullback here, because then you could expect a short squeeze and take it from there. And also watch for the PS ratio. If the PS ratio is approaching 100 or higher, that means it's valuation wise it's a little bit expensive. Like for example here, Ag Eagle, even TAC Hung, a little bit expensive from a valuation perspective. Same is this BNGO. So with that, typically what I do is I look for companies which have done nicely on a 1 year basis and fallen off a little bit in a 3 month, 1 quarter, a 6 month, 1 week basis. And if they're really down drastically, if they're good from a sales growth and a gross margin perspective, I'll buy on any pullback and take it from there. And some stocks, as you know, like Brooklyn, Ocugen, they don't have any sales here. You can base your purchase based on the sales growth. But typically, I look at their profile and see what these companies are doing. If they're doing nicely, if they're coming up with a new drug, it doesn't matter. Even though valuation is high, I would buy some on pullback, because these stocks will always give some pullback. Maybe it's some FDA issue or something along those lines. You can buy and wait for a bounce back. Next, let's look at weekly losers here, small cap losers. The way this chart is organized is I got 1 week performance here on a descending order. The stock at the top, Inovio Pharmaceuticals, I think it's down 21% for the week. And Evolus down 16%, and so on and so forth. And I also highlighted some stocks here like Inovio, Evolus, Dynavax. Some of these stocks have done nicely from a sales growth perspective on a 1 year basis and quarter over quarter basis. So, these stocks, even though like Inovio, they had some issue, federal government is removing some of the funding, but that's why it came down drastically. I would take opportunity of these huge drop offs like this. I would buy some. It's a low price stock. It will always come back at some point. Be careful when you buy call options on these, because normally, when the stock goes down or stays still, especially call options, you tend to lose money. So you can buy the stock outright. These are low price stocks. I think it's a good way to invest. Then we got Aura Shore here, same story. Nice sales growth, good gross margin. You could buy this very low price stock here. Then we got Ardelex, same thing. Nice sales growth here on a 1 year basis. On a quarter over quarter is negative, but nice gross margin. Many times, even though many of these companies don't have a good sales growth, for example, down here in some cases, if they're down drastically, I would be a contrarian and buy some and hold it for a long time. Because given they've done nicely for the year, so there is a hope these guys will bounce back. So if I look at their profile, see if they make sense, I would normally buy them, even though there is no sales growth, or even if it's a negative sales growth at times. If I see some signs of improvement, I would normally buy. Next, we have mid-cap winners here. These are all mid-cap companies. I typically love small cap and mid-cap, because these give very good opportunity for you to buy on dips. They are a little volatile compared to large cap, but that's our opportunity. When they're down drastically, that's when you buy. So from a winner perspective, the way this chart is organized, I have 1 year performance here. It's organized by 1 year performance. Stock at the top, Microvision down up 62% for the week, and from there it's descending order as you can see here. And this stock here, Microvision, as you know, it was down for like last 2-3 weeks. It was down so drastically. That's the chance to pick up. I did buy the stock, when it's down drastically, and accumulated some very good, 1 week performance here. Even though valuation perspective it's high, it's good to buy these stocks in a nice pullback. They always give that opportunity and take it from there. And then we got here Daku Energy, same story, solar stock, just like Microvision here. China play up nicely. This stock was also in the, came down drastically last couple of weeks. Now it's a nice bounce here. I think this stock can still go up. As you can see here, down 31% for the year. As solar stocks as solar trend goes up, this stock will do very nicely along with Microvision. But I would wait for a little pullback to invest more at this point because it's up so nicely for 1 week. Then you can see your skills, same story here, down drastically, up drastically for the week. This is also, it came down so badly last 2 weeks. Now it's bouncing back. So anytime some of these stocks go down, just buy some and take it from there. And skills, as you can see, are down 60% from the 52-week high. Then we got QFIN here, 360 Digitech, China-based play here, and we got Himax. Both of these companies here, nice sales growth. I love this sales growth here. And in this case, QFIN there is no gross margin, but Himax there is a gross margin. These stocks I would buy on any pullback. Even here at this point, 360 Digital Tech, I think they are down 23% for the year. Himax is down 22% for the year. They're still down for 52-week high. It's good to buy these stocks on a little bit pullback. They always give that. Next is Uptech, Tiger, China-based stock trading type company, down 45% from 52-week high. Very good sales growth here. Nice gross margin. I would be a buyer here also. Next, you also need to watch the PS ratio, which is a valuation price to sales ratio. If it's high, buy only when the stock dips, not otherwise. And look at the short float. This is what is causing some of these stocks to go up on a good news. Very high, 18% for Microvision, 12% for Teradata, 16% for Daku. Teradata, I think it's battling some of these bigger siblings like Oracle and a couple other companies. But I would be watching this carefully. I would not be buying at a huge uptick like this. Next, let's look at mid-cap losers. I pay very close attention to these, mid-cap losers, and typically, the stock list with the losers, I pay very close attention. Our advantage here is really when the stock has fallen down drastically like this, as you can see here. If there is a good sales growth, good gross margin, or even if the stock is doing well from a by looking at the profile, I would be a buyer of these stocks. For example, Marathon Digital, as you can see here, up nicely from a sales perspective, 181% for 1 year, 854% for quarter over quarter. Gross margin is negative. But we know this very well. The trend last 2 weeks or so, last week or so, the cryptocurrency market came down drastically. That's why these stocks are taking it badly. Marathon, Riot, SI. So that's when I buy some of these stocks. And you can also, by looking at this list, you can compare these stocks. For example, Marathon, nice sales growth, but gross margin negative. Riot Blockchain, good gross margin, but good sales growth, good gross margin. Probably, this is Marathon is a little more speculative, but Riot Blockchain, it's got a good gross margin also. So you can compare these two. If you're a conservative player, you could buy Riot Blockchain on a little bit down or a pullback like we have now. But if you want to be a little more aggressive, you could do Marathon also. So that's how you can kind of compare these related sector stocks. Silvergate is one of my favorite companies. I buy this stock whenever it comes down. It's really a bank with the crypto assets. Then we got a couple of those here. Turquoise Hill, nice sales growth here, good gross margin. Overstock, these guys are really these guys will change off all the time. They are very versatile, adaptive. I would buy this company on any pullback. These guys went from apparel to furniture to Bitcoin. They always look for some emerging trend, and they want to play in the emerging trend. Nice sales growth, nice gross margin, or I mean, it's okay gross margin, not very nice. Then we got Lattice Semiconductor. With semiconductor stocks are going down a little bit off late. This stock is down 5% for the week. I think it's a good stock here. I mean, sales growth can be improved, but a nice gross margin. Then we got Sonos, New York Community Bank, IIVI. It's one of my favorites here. IIVI down 22% for the year. Nice sales growth, as you can see here. Good gross margin. I think it's a good one to buy on any pullback like this. Beyond Meat, it's again a good meat alternative. I think even vegetarians, vegans, there is no GMO. I think this stock will do nicely on any pullback like this. It's good to buy some and hold for a long time. And these guys are working with multiple restaurant owners and grocery chains and make sure Beyond Meat is available everywhere. Next, we have large cap winners here. As you can see, I highlighted some of these stocks here. Qualtrics, it's a recent IPO, as many of you know, and it was with SAP for a while, but now SAP spun off Qualtrics with the ticker symbol XM. I think they've got a charismatic leader in Qualtrics. He's a very good guy. Talks nicely about this company. Tries to forge the partnership with multiple companies. Stock price is $40. I'd be a buyer in this stock on a pullback though, up 19% for the week. I would wait for a pullback and buy this stock. I think these guys will do very well when it comes to doing the surveys, getting the customer sentiments, and helping bigger companies. Then we got BioNTech, Neo, Bilibili, United Micro. All these stocks here, they've done nicely for the week. Mainly because they've been down for a while now. For example, Chinese names like Bilibili, Wipshop, they were down, and even GDS, they were down drastically. Now they're kind of taking some breather, going up nicely. So our opportunity is to catch these stocks when they're down. I like Cloudflare here. Net is the symbol. These guys are into cyber security and also content delivery network. I think these guys will do very nicely. I would be a buyer in the stock on any pullback. Then we got some of here EBR, EDU, which is a Chinese-based education play here. Low stock price, down 19% for the year. I think these guys don't have any issues like GSX had. I mean, these guys are a little bit in the clear. It's good to buy when this stock is down. Danaher, same story. It's a good steady eddy life sciences company. They're up just minus 10% from 52-week high. I would probably wait for a little pullback here. I would not be buying at 52-week high. I would wait for a small pullback. And the automakers like Li Auto, as an example, it's up for the week 6%, but down so drastically. I will be buying stocks like Li, XPAO, Neo, all these, and even NIU, which is a Chinese scooter type maker. I would buy these stocks and any pullback because EV is an emerging trend. It's good to buy these EV stocks on a pullback. Next, we got large cap losers. I also look at these stocks when these are down. I would buy some. So, for example, Coinbase. Why Coinbase is down? Simple, because crypto came down. All the cryptocurrency, valuations were down. That's why Coinbase came down. I would be a buyer in this Coinbase, even though it's a new IPO. If it's down so drastically, for a week or two, I would be slowly buying some of these stocks and taking it from there. Then we got Peloton. Peloton, as you know, I mean, they had some issue around, it's a sad issue. A kid, I think, got stuck in Peloton. So I think it's not a great news at all. It's a bad news. Stock is kind of coming down, and mainly as people are taking COVID shots, people might go to Planet Fitness or any other local fitness places versus using Peloton. But I'm bullish on Peloton because these guys have done very good job with the online communities, and I think they've done nicely. I think on any pullback like this, I think it's good to nibble or buy a little bit and keep it for long term. And then we got Pennat, say, it's a good stock, pulled down drastically for the week, down 36% for the year. These guys are into sports betting along with the DraftKings and a couple other companies. Shopify, I think, came down drastically for the week, down 26% from 52-week high. Good sales growth. I would be a buyer of Shopify on pullback like this. And same story with Novavax. I think a very, very nice sales growth here, down 37% from 52-week high. It's good to nibble this also on a pullback. Then we got Future Holdings, Southern Copper. As you know, copper is a trend these days. It's going up nicely. It's good to buy on any pullback. It's got some lot of industrial use. Future Holding is a bet on Hong Kong, even global stock trading. I think they have a nice platform. Stock has gone down drastically in last couple of weeks. It's good to buy some and hold it for a long time. Then we got a couple more here: Liberty, Roku, Kimberly-Clark, Micron. All these have pulled back, for the week, and they're also down, as you can see here, from 52-week high. I would be, looking at these stocks and buying it slowly. And then we got UBS here. So I would be scanning this, making sure they got good sales growth, nice gross margin, and they're also a little bit off of their 52-week high, so that we have some margin of safety here, and then buy stock. And in here, I don't see too much valuation risk here, because many of these are maybe Q2 is a little high valuation, maybe one here, Roblox, which is a new IPO, with the exception of 2 or 3 here, but other things are, I think it's okay from a valuation perspective. And Q2 Holdings has got a higher short ratio. Any good news, this stock will shoot up higher. Next, we got mega cap winners. These are big, steady Eddie type stocks. These guys won't move too much, drastically like small cap and mid cap stocks. But as you can see here, these are the winners. We got AT&T, UNH. It's organized by stock that has done nicely for the week at the top and descending order from there. Any of these stocks with the good sales growth, good gross margin, I would be a buyer in these stocks. As you can see, UNH, J&J, Visa. I would wait for a little pullback here because it's up for the week. I would wait for any pullback and buy these stocks. And as you can see, a Salesforce CRM, Mark Benioff's company, it's down 17% from 52-week high. If this stock comes down a little bit, I would be a buyer. And same story with I think here, Tencent. It also pulled back 17% from 52-week high. And one more could be, Pfizer. For some reason, Pfizer is doing good job when it comes to COVID, but stock is not taking a break here. Pfizer, I think it's good to buy on a down day, and it's a good dividend play. Next, we'll look at mega cap weekly losers here. I would be paying very close attention to these losers, as you know. Intel with new CEO Pat Gelsinger. I think he's going to address the issue around the data center, soft sales. I think he's going to do a very good job. Intel is right now facing some challenges, competition from both AMD and Nvidia. I think with this new CEO, he's going to address the issue. According to me, I would be a buyer at least at these lower levels. Netflix, Reed Hastings, very exemplary leader. I think it's good to buy on a pullback. Nvidia, same story. It's got a very nice leader. I think it's Jetson Wong. I think it's good to buy this stock also on any pullback. I think right now they are a little high. I would wait for a little more pullback on this one. And Alibaba, this stock is down so drastically for the year. And so is Nike. Nike is down 12%. So some of these stocks I would buy on any pullback and take it from there. Adobe is another good one. Down, I think these guys are not down much, but if they go down a little bit, it's good to buy this stock. Its CEO Shantanu Narayanan, he's a very good CEO. He wants to make sure Adobe is very creative type company, and I think he's into CRM, marketing, you name it. Adobe is there. And here are some other stocks like Facebook, PayPal. Nice sales growth, nice gross margin. And as you can see here, some stocks like PayPal down 13%, Tesla down 19%, Taiwan Semi down 16%. You could nibble these things on a pullback and hold it for a long time. Next, we'll look at few stocks to see, is it a good time to buy? I think some of these could be counter trend type stocks that you have to, kind of trust your gut and then invest because, it may not be very obvious from the outset. As an example, Inovio Pharmaceuticals, if you look at the chart here, stock has kind of fallen down. There was a high here, fell off. And if you look at the Bollinger Band here, Bollinger Band contracted here. Stock was kind of, RSI was going up at the time. And then it released energy, Bollinger Band exploded higher. So as you see this type of trend where Bollinger Band is contracting, RSI is going up, stock is slowly going up, that's your chance to invest and hope for a pullback. I know it looks obvious, when you look back, but I think it's tricky is to, look at these trends as you in the future, not really in the past. So if you apply the same thing over here, Bollinger Band is trying to contract a little bit. RSI right now, it's trying to go up. I think this line is really, it's stock market is closed over the weekend. That's why this line down here like this. But as you see, if the Bollinger Band is contracting, and if you see RSI is trying to go up a little bit, and even on the balance volume is trying to go up, that's a cue for you that, hey, what, stock might be expanding or price might improve. So that's why when the stock falls off so drastically like it did here, I think it was down 2.26 or so, 24% or something. I think that's when you kind of look at the chart, even though it's not too obvious in the chart, given the stock price is so low, you could buy some and keep it for a while. And if you look at the news here for Inovio, Inovio drops after US cuts off funding. So these small companies, they don't have, all the funding that's needed. They depend on government for the funding. Looks like government cut off the funding here. And they also have some huge short ratio, as you can see, 26% short ratio. That's when the bad news, stock drops off. All the short sellers will probably pocket and cover their shorts to make some money. Then slowly stock will start going up. The remaining short sellers will get squeezed. So that's why this could be in a good position because stock has dropped drastically, and we still have a lot of short sellers. Dropped 21% for the week, and they're down 79% from 52-week high. But if you look at the sales here, they got good sales growth, 1 year growth, quarter over quarter growth. So that's why this could be a good one. But granted, the valuation is a little high, 100 plus. So that's why it's good to buy a little bit. Don't back up the truck and buy a lot. It's good to buy maybe 100 or 200 shares. Keep it for a long term. It's not advisable to buy call options because you don't know how long it will stay flat. But this gives you a cue. Whenever Bollinger Band is a little bit getting narrower, stock will move up a high or low. You can look at the direction, or you can forecast the direction by looking at on the balance volume, RSI, and even DMI. And if you look at other data here, they're not making money. The EBITDA margin, operating margin, net margin, earnings per share, all negative, meaning this company is not making money. They got a lot of shares available, 208 million shares available. So, even with the short squeeze, even if stock goes up, there is a lot of shares available for shorts to cover. So that's why I think it might go up like you see here, but there is shares available. It's not a short supply for shares. And they got good cash here, as you can see, 412. They're not going to run out of money anytime soon. They have some debt which is manageable. Nice volume from a 3 month and a current volume perspective. A lot of insiders are buying the share. Whenever you see insiders buying the shares, that's a good sign here. Insiders are buying, institutions are buying. That's a good sign here. And if you're an option buyer, the IV percentile or a volatility, this is really a volatility percentile for 1 year. It's low. So that tells you, you know what, it's okay. Even if you buy a call option, maybe at a lower price, 70 delta or so, you're not paying too much money for the call option. So implied vol high, historic vol is also high, but IV percentile is the one you should look for if you're an option buyer or an option seller. If it's a low, you could buy option. If it's high, you could sell some put option or put spread. PC ratio, put call ratio is very low, meaning there are a lot of people buying the call options, anticipating or betting the stock will go up. And the earnings is around the corner. So in 2 weeks time, the stock will announce earnings. So at that time, if there is any good news here, this stock is going to explode higher. So with that, I think it's a good one. It's a play on low stock, high short ratio, earnings around the corner. It's good to buy some stock and play safe and take it from there. Next, we got Dynavax here. Dynavax, as you can see here, stock is somewhere trying to bounce off of a lower band, the Bollinger Band, trying to get to the middle band here. Right now, middle band is becoming a resistance level. But soon, if the stock goes up, middle band can become the support. It will try to go off of higher band for the resistance. So overall, I see as you can see here, RSI is trying to go up. As you can see here, on the balance volume is also trying to go up. So those are the two good signs here. So I think there's a very good chance this can really climb above this middle band and then make its way higher. And stock is also very low price stock, $9.59. And it's not a risky play because they got a good sales growth, as you can see here, 15% year over year, 85% quarter over quarter, nice gross margin. You're really buying a good company with the fundamentals on a lower price or a pullback, 12% pullback for the week. So they're still down 22% from 52-week high. So that's why, pullback like this could be opportunity for us to buy. And operating margin, EBITDA margin, net margin, EPS all negative, meaning company is not really, making money or earning at this time, but they're investing in their own, product. And they do have some debt, as you can see here, $218 million debt. I think they have to kind of address it slowly, but I think it's manageable at this point. Institutions are buying the share. Insiders are buying the stock. That's a good sign. When insiders are buying the stock and institutions are buying, that shows there is a conviction in the stock, and even the insider, they want to buy the stock because they feel it's beaten down so drastically. IV percentile is low. Even if you're an option buyer, you could buy a call option, maybe 70 delta or higher, 3 months or more out. I think it's a good one to buy call option also. PC ratio is very, very, very low. This means there are a lot more call buyers betting the stock will go up, and earnings is around the corner. So here also the float ratio is high. I mean, short float is high, and stock is at a lower price. Earnings around the corner. Around the earnings, you can see a short squeeze And if you see here, stock shot up so nicely, there's a chance this might do the same thing over here around the earnings. Next, let's look at UAVS. It's the Ag Eagle. These guys are into drones and some of these no man type aviation. There's a news here. The federal aviation is moving forward with new rules designed to allow use of drones in package deliveries. So this is a positive news for the company. I think that's kind of catching the stock go higher, and as you can see here, they just pierce through the mid band in the Bollinger Band. I think as they make that, that can become their support level, and they can bounce off of the support and go higher. Here also, stock has fallen down drastically, for 2 week, 1 month, even 52-week high. And if you look at the news here, all the news that you see is around litigations, and stock has fallen down, some investor lawsuits and some of those things. But I think this is a good news that federal aviation is really moving forward to allow these drones. That's a good news for this company. Same story here. RSI is trying to tick up here. On the balance, volume is positive. Institutions buying it, insiders buying it. Bollinger Band is like a little bit in the steady roll here. It can cause a short squeeze as you go forward. I would be a buyer in this stock. In fact, I bought when it was low a couple of weeks ago. I think right now it's a little high. I would wait for a little pullback. With this 24% high, good to wait for a little pullback. So next, let's look at LiveX. LiveX is into into podcasts, music, and some of these plays here. As you can see here, LiveX and Queens Gaming, they have some partnership, and they also have some franchise here. It's also one of the top picks under $5 by Motley Fool. Some good news here, as you can see. And the stock is down 42% from 52-week high. Now trying to get its groove back 10% high for the week. So as you can see here, same story here. Stock is trying to go above the mid band of Bollinger Band. I think as it pierces through, that will become their support level. They can bounce off nicely. And if you look at the sales growth here, nice sales growth. I like this sales growth, and they are not making money right now. Operating margin, EBITDA margin, net margin, earnings per share, all negative at this point. But there's a as you can see here, insiders are buying it, and institutions are also buying it, which is a good sign. IV percentile is a little low here, but not very low. I would probably wait to buy call options at this point. It's okay to buy, but not too much at all. Maybe one or two or something along those lines. Very small percentage. Put call ratio is very, very low. There are a lot of people buying calls, betting the stock will go up. Next, let's look at Mile, which is a stock is Metro Mile. Metro Mile is into auto insurance. They want to charge you auto insurance based on actual number of miles you drive. You don't need to pay a lot of money to traditional insurance companies, but these guys really look at miles that you drive. If you're in New York City or some places where you don't drive too much, or even because of this COVID shutdown, you're not driving a lot, you can save a lot of money with this Metro Mile. I think they got some news here. They're naming a new chief financial officer. They're announcing the quarterly result, or I think they just announced. Overall, I think it's okay news off late. Stock is down drastically, as you can see here, for the last couple of weeks. Now they're trying to make a comeback. Same story here. They're trying to bounce off of this lower band of Bollinger Band, trying to go to the middle band. That will become soon the support level. Then they'll bounce off of that. I think this is a pretty recent IPO. Stock is down 52% from the 52-week high. Last week they did nicely, 21% up. I think overall I feel like this stock is punished enough, and this could be making slow move higher. And they don't have debt. They have I think volume is pretty decent here. Insiders are buying it, which is a good sign. With the stock beaten down so drastically, insiders are buying it. I would be a buyer with them. And folks are really betting the stock will go up because a lot of call options purchased for this. Um, and implied IV percentile is 0.7, so it's a very low IV percentile. You could even buy a call option. The stock itself is very cheap price, but you can buy call option also because it's a low IV percentile. So next we'll look at QFin. It's a 360 Digitech. It's a China-based play here, finance in the in the finance and lending business. I think the company, if you see the stock here, stock has done nicely. Here, if you look at somewhere here, Bollinger Band expanded, then contracted, expanded, stock went up. Now we're in a situation where Bollinger Band is like a little bit contracted. It can go up, it can pierce through this upper band that can cause the Bollinger Band to expand further. So overall, as you can see, our RSI is going up. On the balance, volume is trying to go up here, and stock is down 23% from 52-week high. Did nicely for the week. Overall, good sales growth, as you can see here. I feel like this is also a good one to buy on any pullback and hold it for a long time. In fact, last 2-3 weeks ago, this was down for a while, so that would have been a good opportunity. As you can see here, stock came down drastically, still didn't cover too much. So I think this company also gives very good opportunity for you to buy. This company is making money. As you can see here, they got earnings per share, so they are making money. They are not losing money. They have good amount of cash, very low debt, and insiders are buying the share. There is also institutions buying the stock. That shows there is some conviction in this company. People are realizing this is a very good price to buy this stock. Low PC ratio, meaning people are buying more call options than more calls are traded. IV percentile is high, so at this point I will not be buying the call option because IV percentile is very high. But if you want to play the game of say selling a put option, you could sell a put option maybe at a lower price, or a put spread. If you really want to buy the stock at a lower price, you could sell a put option, and that way make some money too. Earnings is around the corner, 517. So I think this earnings can cause the stock to go up. As you can see here, the past earnings stock traded sideways, earnings sideways to down, earnings stock kind of went up a little bit, then went down. Now they're down. Earnings can cause the stock to go up, given it's down 23% from 52-week high. All right, so next is Amwell. So Amwell, as you can see here, stock is down 57% for the year. It's an American Well. These guys are siblings of companies like Teladoc. They're into the telemedicine business, but off late with the COVID shots, people taking shots, telemedicine stocks are really not doing that great. But what you see here, the Bollinger Band is getting contracted. Stock is trying to make a high here. RSI is going up. On the balance, volume is flat. I can see the volume is really raising off late. That's a tell that this stock can go higher. Bollinger Band can expand nicely. If you see here, Bollinger Band contracted, expanded nicely, stock went up. I think same thing can happen here also. Bollinger Band so much contracted. At this point, stock can go up, and this Bollinger Band can open up nicely. And here also float ratio is relatively high, not too high, 6.7%. Nice gross margin. Company does not have any positive revenue growth yet. It's a newly minted IPO, maybe last year sometimes. And IV percentile is low. Even if you pay Even if you buy call options, you're not paying too much. It's you could buy call option maybe you say 3-4 months out, and PC ratio is low, meaning there are a lot of people in the options market betting the stock will go up. That's a good sign. And insiders are buying the stock. I think they're realizing it's a good price, and institutions are also buying the stock. So that's a good sign here. So I'd be a buyer along with them and take it for a long time. This stock has really taken a lot of beatings in the past. It's really trying to go up at this point. So next, let's look at lithium. Lithium is into battery, lithium battery, as you know, EV play. Nice looking chart here. Off late, last couple of weeks, they are in a downtrend, as you can see. Now they're trying to break the downtrend and go up. As you can see here, sales growth is negative for the year, 19% down. They're up quarter over quarter. Gross margin is okay, not too bad. And they got a high short ratio, as you see here. They're up 9% for the week, down 24% for the week. From 52 week high. They've done nicely for the year. And from a earnings perspective, the company is still not making money. They are losing 13 cents per share, which is okay for these type of companies. But they have some debt, not too much. $253 million debt. I think it's a little higher. It's understandable for these type of companies. And they got institutions buying their share at this point, 16.7%. IV percentile is a little higher, maybe not a good time to buy call options at this point, but if it goes above 50, you could sell some put options somewhere like 10 or 8 or something along those lines. And PC ratio is low, meaning there are a lot of people betting the stock will go up. They're buying call options. Earnings is around the corner, just 5.3. So I feel like with the earnings around the corner, high short ratio, any good news can cause the stocks to go up, and the Bollinger Band will expand nicely, and I think that will cause the stock price to go higher. Next is SEIC. These guys are into investments and finance area. Stock had a earnings, I think, last week. As you can see, a huge candle down here. Historically, this company is kind of steady Eddie type company. You could buy this on any drops here. As you can see here, earnings, stock dropped, traded sideways, went up drastically. Earnings, stock dropped, earnings, stock dropped, earnings, stock dropped. So it's a sequence. You can kind of, clockwork. It kind of happens. So this could be a good opportunity. You could buy some, and it will slowly make its way up, and next earnings probably you can sell it off and take it from there. As you can see here, dip, Q1 earnings and revenue miss estimates. That's the main news here. And I think they're doing nicely from a sales growth perspective. Good growth from a quarter over quarter, good growth from a 1 year perspective, nice gross margin. It's like a steady Eddie type company. And they're down 9% from 52 week high and up 21% for 1 year. I think this could be a good opportunity to buy on a dip. From a they're making money. They have a $3.05 earnings, nice gross margin, net margin, operating margin, and they got good amount of cash and some debt which is manageable. Insiders are buying it. Institutions are buying it, which is a very good sign. IV percentile is very low. You could even buy call option for 3 months out or even longer. And implied wall, historic wall, I would not worry too much about this, but PC ratio is low, meaning there are more people buying calls than puts. That's a good sign. They just announced the earnings. Earnings is coming much later now. So with that, I would be a buyer in this stock. Nibble or buy a little bit because it's down drastically. Historically, always went up after the huge drop like this. Next is NIO. NIO is a Chinese EV maker. So you could kind of, NIO NIU, which is NIU, and XPAV, Lee, they're all in the same league. You could, kind of use the same strategy for all of those. So looks like NIO picks momentum here in the Shanghai Auto Show. Hypergrowth stocks, according to Motley Fool. I think, overall there's a good vibe towards these EV kind of stocks. As we see here, Bollinger Band perspective, contracted, expanded. Now they're a little bit contracted. I could say expansion as we go forward. Typically because RSI is high, going higher, and on the balance volume is going higher. If you see these two going higher, then typically, this can go on the higher side. So they got, not so much float short ratio here, which is manageable. Nice, these guys are making money. Nice 1 year growth, nice quarter over quarter growth. Gross margin is also okay, not great, but it's okay. Down 38% for the year, and they went up 13% for the week. And they're still losing money, as you can see here. Negative gross margin, net margin, earnings per share is negative. They do have some debt, which is understandable in the auto industry. Insiders are buying the stock. Institutions are buying the stock, which is a good sign. Implied vol IV percentile is 0, meaning it's okay to buy call options also. And PC ratio is really low, meaning people are betting stock will go up in the options market. Earnings is around the corner, so this earnings can cause the stock to go up. As you can see here, earnings, stock went up, earnings, stock went up, earnings, stock went up, earnings, stock went a little bit up. Now stock is already low. This can cause the stock to go up if they provide some good news. Last one is ZI. ZI is Zoom Info. It's one of those companies. If you're in the sales organization, you always need to know who is the decision maker. ZI will give you the decision makers in any company using their subscription based platform. So all the big companies, they want to reach the decision makers. So that's where this company can help with their platform. So overall, as you can see, a stock is has not done greatly, down 20% from 52-week high. And right now I think it's trying to take off. It's already above the middle band of Bollinger Band, and it's trying to go higher. Bollinger Band is a little bit contracted. It can really expand as the stock explodes above this higher band here. From a news perspective, looks like C3AI, Snowflake, Zoom Info. I think Motley Fool is kind of checking in on them. Probably there's a good positive vibe there. And I think these guys are doing some, their Attains 2021 Trust Arc. I think that's again good news here. They are named a leader in B2B marketing. That's a good news. Overall, I feel there's a positive vibe. And as you can see here, RSI is trying to pick up here. On the balance volume is also trying to pick up. It's trying to go above the higher band in the Bollinger Band, which is all good sign the company will go higher. On a weekly basis, it went up 7%. High short float ratio about 10% here. That can cause any short squeeze as the stock makes its way higher. And they're not still making money. Their earnings per share is negative, but they have a good positive operating margin and EBITDA margin, which is good. They do have some debt, 785 million. Insiders are buying the share, which is very good. Institutions are also buying the stock, which is also nice. Low IV percentile, you could even buy a call option like 70 delta or higher, 3 weeks out or so, 3 months or more out. So with that, I feel like from a put call ratio perspective, it's a little high, meaning people are a little bit wondering whether it'll go up or down. That's why more puts traded than calls. So I think that's something to watch out for, because there are still some folks who will think the stock will go down. So normally, I would not worry too much. I would take a look at that and look at these technicals and fundamentals, and then I think it's okay to buy on the pullback, given there's a short ratio, and stock is showing some positive technical indications it will go up. So with that, that's a wrap. Thank you very much. Have a great investing. Thank you.